As we remember the flash crash, we're joined by William O'Brien, CEO of Direct Edge. On any given day, Direct Edge is the third or fourth largest exchange around. Mr. O'Brien, welcome to Bloomberg's Bottom Line. Thanks for coming on.
You're welcome, Mark.
What happened to orderly markets? What happened a year ago that sent everything into such a tailspin?
Well, I think your report characterized it well. Not only were we having the situation with Greece, which is ironic given the news that's coming out today,
right,
but I think people forget that's also when we were really starting to understand about the tragedy of the environmental disaster in the Gulf of Mexico.
Yeah.
So markets were very jittery, and there was effectively a shock to the system, and we had a lot of irrational results that day.
How did Direct Edge respond to this?
Well, during that period, our technology was up. We operated, but it clearly identified a flaw in our market infrastructure. And under the SEC's leadership, we worked very quickly with other exchanges to put mechanisms in place to prevent the most irrational aspects of that day from reoccurring.
Would that flaw have exhibited itself had it not been for the flash crash?
It's possible it could in another circumstance, which is why it really was an important wake-up call, I think, for the industry.
This week I interviewed Gary Gensler, the chairman of the Commodities Futures Trading Commission, and I asked Chairman Gensler if a flash crash could have again. Let's listen to what he said, and then I want to get your thoughts on that.
Sure.
We're still working with the SEC on what's called cross-market circuit breakers. But I would say this, until we finalize these rules on derivatives, the public really will not be protected, and that's what we need to do to move forward.
Is he right?
I think he is to a degree, because we've made progress. You know, the most egregious aspects of what happened that day, a stock going from $39 to a penny to $38 in a matter of minutes, that can happen again with the progress that we've made in the last year. But we still have a lot of work left to do to improve the coordination among markets, to improve the level of information that regulators like exchanges, the SEC, the CFTC have, to better surveil for the markets, detect circumstances where flash crashes could occur in the future, and try to prevent them. And then if they do, understanding them a lot quicker and taking the appropriate remedial action.
So am I hearing you right? Are you confident that something like this cannot happen again?
Well, the exact nature of what happened a year ago today cannot happen again because of the circuit breakers and other mechanisms we have in place. At the same time, we still have a lot of work to do to continue to improve the infrastructure of our market and keep that compact of investor trust alive and growing.
Now, it's interesting because what we could have here is maybe something that happened by accident, but as President Obama, member of the administration, have said previously, that there are elements out there in the world who would like to disrupt the U.S. financial system, perhaps by putting some sort of computer virus, which could cause something like that to happen. Is that a possibility?
Well, markets are very interrelated, and it's not just globally, but among asset classes. I mean, I think on Bloomberg and every day you talk about how oil affects commodities, affects the dollar, affects the stock market. So you really need to make sure this fabric of our market infrastructure is working very well together, adequately protected across the entire complex, and the regulators are talking to each other.
And we're talking to William O'Brien, the CEO of Direct Edge. I know you have heard this criticism of some of the high-frequency traders, and later in the broadcast I'm going to be joined by the CEO of TradeWorks. The high-frequency traders, they're doing a lot of work, and they've gotten a lot of criticism. Is that criticism fair?
Well, I think it's really just about technology and what role does technology play in our markets. It's really transformed the stock market and the financial markets like every other aspect of American life. I don't think turning back to a time of less technology is really the answer. I think what's been most impressive about the progress we've been able to make over the last year is most of the solutions are based in technology. The circuit breakers that I gave you an example of.
Exactly.
So I think technology is more the solution than the problem.
Direct Edge has stopped doing flash orders. First off, tell us what flash orders are.
Well, flash is really more of a technology that can be used a variety of different ways. The way we used it was to give investors access to non-traditional liquidity in a way while they still had access to the liquidity on our exchange. We had basically taken a voluntary action a couple of months ago in light of where the regulatory dynamic on flash was heading, and we discontinued the practice.
Well, the SEC has proposed that flash orders be banned. Do you agree with that?
Well, we've always said that an evaluation of this technology and its role in our markets should be subject to a thoughtful and comprehensive process, and it really has. And so in light of where that debate was heading, we took the action that we did.
The human touch. Some of our people have been talking to folks down on the floor of the exchange about that, or Lisa Murphy was actually interviewing somebody about that. Has that been lost now?
I don't necessarily think so. You know, the types of situations we had a year ago today, they happened in a more manual time in 1962 and 1929. It's really about making sure that we take the unique aspect of what a person can add to the process and then leverage that through technology to make our markets better.
Well, way back in the day, trading on pieces of paper in coffee houses down in Lower Manhattan, too. Direct Edge, is there an IPO in your future?
Well, we really feel like we're trying to build, as America's newest stock exchange operator, a company that can endure. So we're spending a lot of time improving our company across a variety of aspects.
And I know you use that phrase. Is it America's best secret in the market, best kept secret?
Well, I think we compete against firms that have been around for decades, in some senses centuries. So I think it's realistic to understand that we're the new kid on the block, and we have a lot to do to further improve our company and improve the products we offer to brokers and their customers, investors. And if we do that, we think we have the potential to be around for a long time. William
O'Brien, the CEO of Direct Edge, joining us on set talking about the flash crash. Mr. O'Brien, pleasure to meet you. Thanks so much.
You too, Mark.
Appreciate it.